All right, traders, welcome to today's recap. This is, I was going to say Wednesday, but it's only Tuesday. It's October 2nd. And, well, we've got a lot to go over, so it might be a little bit longer of a video, but there's a very interesting, I think, market going on, especially when you look underneath the hood right now. So, S&P, you would think nothing of it. You think, oh, today's probably a pretty boring day. If you look at the headline number, up 5 basis points. What are the things that I have been noticing? So we're going to talk about sector separation and the R word, the rotation word. But just look at the range right now in the S&P. It's pretty tight, and it seems to be getting tighter and tighter as we get through the week, and really that's because of what are the components, right? These are not animals that function on their own. There's components to the S&P 500 and to any ETF, any index. There's components, and they're the sum of the parts. So right now, what are the sum of the parts telling you? Well, if you go into and look at the sectors, you've got a number of really red sectors and you've got a number of really green sectors. So right now, some things are performing pretty well and some things are getting hammered right now. So let's go over and we'll look at SPY, and I think just kind of looking at we'll look at the sectors as well, but I also wanted to look at the individual names because remember, it's market cap weighted. So Intel had a huge day today. Deere was up huge today. Celgene actually had a really nice day. And you don't see Apple or Boeing, but they actually had some really big days as well. So, and then if you look on the right side, you see a lot of names were down over 4% today as well. And you could, dig through and check it out, but you've got some really major sector separation going on right now. So let's look at a couple individual names. I'll doing this backwards. Usually I like to look at the sectors first, but I mean, Apple looks like it's got a really nice breakout going on. It had the first day of an MACD crossover. So, it could be more of a case of, I've been trying to get my head around this. Believe it or not, Apple is not a growth name. It is a value name. And I'm trying to, because I think I hit this pretty decently about a month or so ago when we saw a big rotation out of growth names and a big rotation into value names. And we saw the ETFs and the volume that happened within the growth and the value ETFs, but that's not the case right now. And Boeing is actually not a value name. That's actually a Russell 1000 growth name. So Boeing looks like you would see if you just looked at Boeing, you would think, wow, this market is really running pretty decently right now. Intel, which has been doing the exact opposite of AMD, maybe to a lesser extent. But AMD's right now, it seems like it's a zero-sum game. For a while, AMD was doing very well and Intel was doing poorly. Since the interim CEO came on the other day and said that they're going to be ramping up spending, AMD has been kind of hit in the stomach, and Intel has been charging, from the lows. So, did not close on the highs, but still pretty nice day, up 3.6%. At one point, it was up well over 5%. So, pretty amazing stuff. And then if you kind of continue this exercise and you look at the sectors that performed well, I'll start with the best performing, GDX. So if you're not opposed, and I know this GDX has been a very difficult trade, but it looks like it's putting in left shoulder, head, right shoulder, inverted head and shoulders. I would watch the 50-day moving average. The neckline violation of the neckline is not complete, so this could settle back down. It could just be a little bit of a bounce, but for this group to get to be starting to perform, I think is interesting. And then utilities were on fire today as well. They, not above the 50-day moving average, but look at the bounce on the 200, which I've noted a couple times. I really, did not take advantage of it, but they are one of the best performing sectors. And look at the week that utilities have had. We did see some call buying in PCG, Pacific Gas and Energy. So if you don't want to go long the whole XLU, this is the one that's been seeing the call buying. And look at the base. Now, of course, you got a VPOC up here, so you could set your target up here, which is not that far away. But if it gets through this VPOC, maybe might have a more ahead of it. I think this was this was involved in the forest fire investigation. I believe I'm not 100% sure here, but I think that's what that drop was. But we're now in this, and this was the big volume that happened here. So that's going to be an interesting point for this name. Okay, and then a couple other names. We saw some big U.S. steel calls go up today for January. So, this was another name. I'm not really sure what to. Sometimes I'd like to let these names start to get going a little bit, just so it kind of confirms. But it is below the 200-day moving average pretty decently. And, I kind of hesitate on some of these names that are in downtrends because I'm more of a trend trader. So I tend to avoid names. I will take small shots at names that are beneath, that's kind of my program is that I'll participate every once in a while in a group or a name that's in a downtrend, but I will do it with smaller size because, again, I stick to the trend for the most part. Consumer staples did very well today, and material names were also green today. Now, so that's kind of the good, and most of those names that I'm talking about are more, maybe not Apple and Boeing, but a lot of those sectors are more defensive, I would say. And so what got hammered today? Well, XRT took the biggest fall. And don't worry, I'm going to talk about NASDAQ and small caps and transports too, but I just want to kind of get through sectors first. Like I said, there's a lot to talk about today. But look at the XRT, right? This was kind of these two moving averages were a little bit coiled. The price action kind of looked like it might make a turn and go higher. But look at this thing. And Stitch Fix, this is the equally weighted. So every name that's in this ETF gets the same weight. So SFIX was not that huge of a component. But clearly, when you go down 35%, you're going to affect the overall, the ETF itself, right? It just you can't get away from it when you have that big of a move, even though it was a small weight to begin with. And you can see in the XRT the movers. Whoops, it's not coming up the right way. But if you look at, there we go. The movers also JCPenney, Asda. So this did spread over to some other retail names. You could see that there was a decent amount of names that were down over 5% yesterday. And if we flip this around, if we just look at names that were down around 4.5%, Macy's, Etsy, Gap, Carvana, Foot Locker, Chico's, Wayfair, Overstock. So you bet that this Stitch Fix, even though I think it's kind of trivial, but that an online retailer does that to the whole group. I mean, it's pretty specific, but still, the whole group got pretty beaten up with this move. And next, what's just a lot of other growth areas. So then, if you look at the names that moved down, not Palo Alto, but if you look at the Hack ETF, this thing got hit pretty hard. I want to talk a little bit about. I mean, consumer discretionary also got hit hard today, down over 1%. So again, you go back to the S&P just being flat, and consumer discretionary, retail, a few different sectors. If we go to the software names, they got hit today. They were down 1.5%. So again, not 2%, but still 1.5%, and they're starting to come in a little bit. Biotech was another group that got smoked today, down 1.5% and down into the 200-day moving average as well. So when you look across these parts, now we know what's been going on with banks as well, which actually finished off the lows, but they've been straight down. I think they've been down 7. I had this before. I actually tweeted this out earlier, but my point is going through this. If you like growth names, they're really sorry. Let's bring up how many down days in a row this has been. Whoops, and I need KRE equity HCP. Yeah, so we got 5, 6, 7, 8 straight days in a row that the regional banks have been down. So they did finish off the lows, but I think that's down about almost 7%. In about 8 days. So really a big move down here, and a break of the 200-day moving average. We get some support here. Maybe that's holding. I will talk a little bit about the bigger banks today. They showed some signs of life at the end of the day. And if you look at JP Morgan, which is kind of my go-to name, we saw a little bit of calls the other day in this. But, you could basically draw a little bit of a downtrend line, but this actually did pretty well today. It finished up 40 basis points. So again, not everything is doing poorly, and that's really the theme of this today's video. It really depends, the names and the stock picking. So just because it's a stock pickers market does not mean it's easy. So this is FTN. This is the Internet ETF. So this is, you have your names like Amazon, Google, Facebook, Netflix, PayPal are in this. This also coiled, right? And I actually had this in my newsletter for this weekend, and I went through a couple of the names that were in here. And, I was talking about, hey, this could be a big move may be expected, considering that how intertwined and coiled these moving averages. Usually once you start to get out of range, it could really get going for a big move. Now, it's leaning pretty decently to the downside. I've seen this before, like here, and it snaps back up and then it goes, but it's got to do this pretty quick. If not, I would say we've got a ways to go to the downside in this ETF. So I would be mindful of that. And I've seen this now for a couple days in some of the FANG stocks. They just can't get going. So they just don't have the momentum. Now, I don't know if they're going to completely fall down, but I bought a little bit of puts today. And I've been very, very bullish, but I want to basically be very objective, right? The more that you stay anchored, in my opinion, over the years trading, the more that you stay anchored to, things are definitely going to just go march higher. To me, that's not how I trade. I really try to reassess things as they change. Just like I had this weekend, I was saying that this FDN Internet ETF could kind of come out really nicely to the highs. But if it breaks down, it breaks down. So be it. And if that happens, it'll probably be a really interesting earnings cycle with some of these names selling off into earnings, right? So usually they run into earnings, but maybe this time it might be different. Keep in mind as well, buyback plans. Most of these companies, the buyback plans are all going to be turned off this week for the next couple of weeks. So you're not going to have that underlying bid in here. So that's why I'm leaning a little bit bearish for the next couple of weeks. So again, there's nothing wrong with that. There's nothing wrong with playing things a little bit to both sides. And I really haven't been shorting that much until I see opportunities. But to see, the gold miners, to see things like utilities rally, it tells me that something bigger might be going on here. Maybe it's the fact that the Fed is talking about how much they want to tighten next year. So it's starting to come to a head, I think. So now if we go back to IWM, you could basically see that this has been breaking down. It is starting to get oversold, but it's not there yet. I think this thing goes down to 161.5. So sorry to make these predictions, but if you look at the RVX, right, which is the VIX for the IWM, believe it or not, there is that instrument out there. This does not look like it's a reversal bar today. This looks like it may want to go higher. So, is sentiment going to save us? Is sentiment getting really bearish? I don't think so. I think it could get a little bit worse. I think sentiment could get a little bit worse first with the S&P at, all-time highs. So I don't know how you could really say right now that sentiment is bad when you have the S&P at 52-week highs. I don't know. I don't think we're there yet. I don't think there's anywhere near blood in the streets to say that sentiment is bad right now. So I think we may have a couple days of this. So what did I do today? And I want to talk about the Qs as well and the transports. But so that's for me when small caps do this, by the way, I get conservative. I don't get aggressive. I have thought over the my trading experience that small caps usually lead market moves, and this is telling me that the market is starting to move down quite a bit, and I think that you might see that in further growth names. Again, not to say that that's going to be a long-term trend. I just think it may happen for a little bit. Okay, so that's that. And if you look at IYT, that's also breaking down. This looks like it wants to go lower too. That's a closing on the lows down 1%. and we're breaking things here, right? We're below the value area for the month of October, and we're right at the 50-day moving average. So this doesn't look, rosy either. So, if you kind of use the approach of looking at a bunch of different things. Now I know the Dow is strong as well, so it could also just be a rotation out of some areas that have been, leading the market, and there might be a little bit of a changing of the guard. So those are the kinds of things, and the cues, right? I mean, we're just off of a 52-week high, so it's not like this has been a beaten down group or anything like that. So I personally wouldn't mind a little bit of a reset. It would shake the weak hands out. I do see this every time that we get new 52-week highs in like the S&P. Everybody starts giving each other high fives about what I don't know, but it seems like it's a little bit too much positive sentiment rather than negative sentiment to me. Again, not full boat, but I would have to say that the sentiment is leaning bullish, not so bearish. And again, not crazy bullish, but it just is what it is. Okay, so that's that. So what did I do today? I want to give you a little bit of what happens when I think the market uh, starts to turn. I started to put on some small trades for looking for names that could run into earnings. I took them all off today. Again, a lot of small little trades. A lot of things where I took off a little bit of a grub trade, although grub doesn't look bad. But I just started to clean house a little bit. If I think we might get a little bit of a correction, again, the correction probably not the right term, but a little bit of a pullback. I don't need to be in any short-term option plays. So I want to let the dust settle. I want to make sure I'm hedged and go from there. And if I'm wrong, and the market continues to march higher and the buyers come right back. I've got a pretty clean portfolio right now, and I could do some damage with getting back into some longs. But for now, let's let this play out a little bit. As I was going over the RVX, uh, where I think this is could move higher. So volatility, I think, could pick up in IWM. We're not seeing yet in the in the VIX, which measures what it does for the S&P, which kind of makes sense because you look at how small the incremental moves today or have been in the S&P. It's the VIX is doing what it should be doing. It's not giving any warning signs because we're really moving in a very, very tight range. Is it giving it for the Qs? Not yet. I would think if this starts to get above that white line, then I would say buckle up. But we're not there yet. So I might be getting a little bit ahead of itself. I do not have a VIX for the FDN, which is internet stocks. But again, to me this reads to me bearish. Let me just talk about the option activity for 2 minutes. There wasn't really that many big trades. Apple, there was a little bit of calls in this one today. There's the other thing that's pretty interesting is what's been going on in semiconductors. I think the semiconductors finished green, so that's also something that's for the bulls. So again, a lot of back and forth things. Sarepta, I don't know why this jumps out at me, but there was a call buyer. It was a pretty large call buyer for this week. So I don't know if they have a study, but there were some weekly calls that were bought pretty aggressively. A few other names. I don't know why they love these casino names that just keep going down, but IGT calls. We also saw some Caesars calls. They've been buying these IGT and SGMS now calls for months. And if you follow those trades, you would be down a lot of money. So, but nevertheless, maybe they're going to be right. Looks like I have a duplicate in here. There was only one trade there. There was some Mylan calls that went up. Those went up mid-market, so I don't know if they were bought. PCG, I mentioned that already, that there were some calls, some SeaWorld calls, weekly short-dated calls in SeaWorld. Take-Two all the way out to March. Maybe somebody thinking that Take-Two will take out the highs and go higher. We saw calls that went up last week in Take-Two, short-dated calls. Those are completely not working. QRTA saw a big January call buyer. So that's an interesting one. Also, Intel. So these big January, these are 2020 calls. I know it says 2017 on there. So there's a couple of today's trades. We'll leave it there because I like to keep these videos definitely under 20 minutes. But a lot to go over, and this is interesting. If these moves are happening too fast for you and you're not comfortable with this, you can do what I did and just kind of trimmed my exposure and said, let's wait and see how things go. I have a couple shorts on now just in case we really do spill over to the downside. And, that's just a little bit of insurance because you go back to the Qs and the VIX, right? We know, and same thing with S&P, which I don't know if puts in S&P are going to work if we continue to get this rotation. But they're both are cheap, right? We know the one thing that we do know is with the VIX down this low and the VXN, puts our insurance right now is extremely cheap, inexpensive. So I think it makes sense if you're a little bit worried like I am about the next couple weeks in the market. They're cheap. All right, guys, thanks for watching, and stay tuned till tomorrow. Have a great night, everybody. See you tomorrow.